Welcome to TradeTheMBI.com. This is John. This report is for August the 1st. And like we talked about, I mentioned it on the Skype chat that we were likely to go flat to nothing. What we were looking for is an increase in the shakeout. We can see that, well, let me put the numbers up just so that we're talking about the same thing from this reduction right here. Wait for it to pop up. Okay, so we were all the way up there, 1043. Dropped down to 444, and then 460 was the other day. I mean, that's a slight increase, but that's the kind of turnaround you look for, particularly after we had our short view once we popped above there. Same time you had the slight DOC, but you had the reset of the steel, and we were watching that turn around at the same time. So the short-term buyers mitigated that softness. That's why we were just expecting to basically kind of stay right around the ABM yellow level. We weren't looking for a breach of the green in any way, shape, or form. That's why I called it a soft move. And that's exactly what we got. And now this, coming at the start of the month with a turnaround, potentially can lead to the next new breakout, moving us towards that 25. And like I've said, if we get to 24, 85-ish, 86 range, I would think that 2500 is set. But even as I was speaking before, the range somewhere up near the 2560-ish would be typical. But that's still a significant move even from here. So we'll keep an eye on it, but what we're looking for is to see more of that orange break down below. The red here is kind of flattened out a little bit on this move, but you had the crossover of steel, short-term buyers, and now you're getting also midterm crossing the red, and that actually is a decent support move. I wouldn't necessarily say it's the beginning of a power move. What you really would have seen is the orange dip straight below, and that would be the most dramatic. But that doesn't mean that we're still not going to keep moving, edging. As you can see, pre-market already +7. This is what I mentioned at the end of the day, that they would keep it flat going into the close and the month for a solid month. I mean, when you look at it from the beginning of June, right over here, we opened at 2411. You close at 2468. This is a decent move for the month. No objections whatsoever to that. So, good to see that. Puts it right in line with our expectations. NASDAQ a little bit weaker, and that was the softness that was simply because it got a little overdone, and we could see that it dipped below the extreme here, which means that we would like to retest those lows, which it did promptly do right around the ABM green. So that provided support. And it looks almost identical to the S&P. The difference you get sometimes when NASDAQ gets moving, the tech stocks will keep going in a little bit more of a direction. The S&P is a little more mean reversion. When you have so many diverse companies, it's a little bit harder for it to get out of control. Speaking of out of control, the euro continuing its assault higher and higher. And I thought this was a good opportunity. I enlarged the DOC here. I wanted to show a couple things. The difference between when we get a move of orange above 13.5, when you're likely to get some kind of directional move with it, versus when unlikely to see as much. And it literally has to do with where we are with shorts in relation to it. In this particular case, you get the move coming up that happened right over here. At the same time, you get DOC spread, which is the cyan moving above red, which indicates that shorts have strong control of it. In this case, you had a reset of the steel, which meant that it probably wasn't going to be very long a move, which turned out to be absolutely correct. But still, a significant number of days for the short to take place. The difference you ended up with over here when we get into the sideways action, cyan well below red. And that is the difficulty. When that orange moves above, and this is what we've seen, anytime you have that cyan below red, it's a very powerful signal that bulls are in control. The same thing happened right here. Finally, you get a little bit of softness, and that's why we were referring to some of the things, well, even the daily on the ES. Softness is not the same as a full-on, short expecting the bottom to cave in. Now, we are seeing DOC red in that very high elevations, like even this for the euro. Can't sustain that. The question will be how far it dips, but as long as that cyan is this far down below, not expecting any kind of move to the contrary. That's going to have a significant change in order for it to react to it. And so this just lets you know that, fine, you are overbought, no question about it. You're moving into extremes. We knew that already with the extreme histogram as well. But that cyan being there means there's no short activity, so it doesn't take anything for price to keep just getting piled on when you don't have sellers. So I thought that was a good opportunity to kind of show that in a visual form. And it's not always the same. When you get these clear ones where, you've got strong move of the orange and you get your DOC spread develops right there. Big difference, particularly too, even when the cyan is above zero. Is another one to look for, because once you break that zero line, you already have more of an interest in shorts, particularly if you've already had a super active red. So a little bit of subtleties in there. It's always good to point it out just to see it. Bond reaction, that's kind of strange, because the reality is we're seeing a heating up of the economy. This is what we talked about was going to be necessary to see a real move in oil that is sustainable, that actually can keep it. And while they can turn the spigot on when there was low to no growth, meant real price instability, this is an indication that there's a potential for pickup in economic activity. And that's the early sign of it, because this lets you know, hey, we've got increased demand. Now, we haven't necessarily seen an inventory draws, you may not, but what you may see it in is the number of barrels per day being consumed, and that really is going to be the determining factor. And if things start to get rolling, it could propel pretty quick. I mean, you're seeing pretty substantial profits from U.S. companies with the low interest rate environment. Even if the Fed wants to get out of control, there are limitations to how far they can go. They've already been tightening rather quickly. They were a little too aggressive at the end of last year. Right after the election, they needed to have slowed just a little bit. We probably would have been closer to that 3% growth number that Trump was talking about, simply by enthusiasm. When you take the shackles off the American entrepreneur, he will produce, and anyone who thinks otherwise has just lost the story of America and what it is to have opportunity. And gold is going to continue to drive gold, because the expectation is that finally inflation is going to start to ramp up as the central banks have to tighten that. The oddity is on the euro. I mean, with the added liquidity going on in the ECB, you would think that the euro would be going the opposite direction. So we know that there's some central bank shenanigans at play there. So here was the day action. Let me just shrink this just a fraction. And you can see we had a nice little spike up. All we did was get overbought, which I mentioned that we were going to have to refill that. All we did do is what? Refill it. Right over here, got a little oversold, which meant we were going to stay down there for just a little bit longer. But then when we reached new lows on higher extreme, very bullish, and then boom, you get the orange below with the close above long algo. And do we take off? Yeah, if you want to call a couple of points taking off. All we did was pretty much essentially finish pretty much flat from the open. And as I mentioned, we would close, and then they would start the new month out pushing price to the higher side. And there it is. We've already broken out to the new highs on that. And it doesn't put us far away from in that mid-80 range, which I said would then likely pull price up towards the 25 as opposed to a breakdown. It just continues to confound the shorts that add into it. And again, it just points out you cannot just arbitrarily short just for the heck of it. If you want something that's significant, you have to have a reason. Now, that doesn't mean intraday you can't do it, but we're talking about from the daily standpoint. It was a little premature for some people to want to be clamoring, particularly when, if I go back to it and you see the cyan below red over here, and that not so much. When we finally got the breakout of the cyan over here with the pop of the orange above, then you actually had the potential for that move. The interesting part about it is you get the yellow breakdown. Usually you want to see also the magenta start to collapse below it, and that didn't turn out. And it's always the key at this point when you start to get that drop. How quickly do you get to the 0 point on that shakeout, and does it break into the negative? Because that's usually when you get a little more follow through, but a little more volatility when it happened over here, and we're not seeing that at this particular point. So that is what it is at this particular stage. All good from trade. I think we're going to start to see bigger ranges now as things start to get a little more excited. And of course, we have new fund money coming in by the 5th. So right around the end of the week, I would expect to even see more activity particularly even going into the weekend. So it could be an exciting rest of the week. Let's look forward to a little more swing trade action in there. But either way, it's still, oh, you know what I wanted to show too? The Opus trades, because we have both of those. We have this version and then the other one that actually has a doubling on it, which is right over here. We've had some nice little runs that have led. We had a double attack right here with a Rainbow Hawk and an Iron Hawk. Right around the 70 range. So even catching the dips on those where I was saying that they were good opportunities to buy above that 60 level would have provided even bigger opportunity to get in with a daily stop below. And if we do a performance report, let me do that. And with the magic, there we go with the performance report. So huge graph going, continuation on that move. And it's interesting, during this period of Fed involvement, while we're still getting new peak highs, it's been a little tougher because it hasn't created the kind of volatility swings that we expect from the S&P, where we had normalized periods where you would have dips and then rallies, and that's usually what the NBI Opus is always looking for. But we're going to get close back to the equity highs, which was that right over here, around 1.867 million, and we're at 1.84. You know, it's interesting because we look back at this, and there's so many of these trades that over the last couple of years that, you know, we cautioned, it's like, okay, wait for this, catch it a little bit lower, went for a little bit longer. So we actually have even done better than this, and look at that, still at a 74% win rate. I mean, when we look at it from the periodic returns, the 50K NBI Opus 2 also still doing fantastic. It takes a little, you know, I do these typically manually because otherwise it would tie up the actual trading from it, but just for the year so far, you know, right there, 36,000, just following these simplified trades that don't really require any activity. You just basically have a profit target and a stop. The new version that I was working on is going to be one that will actually follow these with the Fibonacci and ABM setup based on when an actual cell type signal comes in and then adjusts to the most appropriate Fibonacci retrace with ABM setup, and certainly that will produce even longer runs. The power of the NBI Opus here was that it was designed to capture just simple ATR moves, which is typical for the ES and most major markets, with their mean reversion basis. So I don't want to run forever, but it was just good to show that because a lot of fun details go on here, and this is a slightly different version of it. Which one is this one? Let's just go ahead and put it up there. We go to strategy. This is the Opus Future Strategy with a slight variant. I'll have to put those back up again so that everyone is clear on what the parameters I have set for those. It hasn't changed in, the last 10 years, so it just does its little thing, and, you know, if you're willing to follow it, it's boring and slow, but, you know, for inactive or those just looking for, you know, longer-term gains, it's still the way to go. As always, though, continue to look for me on the Skype chat. Just a word of caution in the future. I did a copy of the chart. You know, I went right here, and then I did a copy window, and I went to paste the window and change it to a Renko chart. Remember that we were talking about looking at those. And I left all my analysis techniques on. And boy, it took me, 3 hours to get my system back up after that. I always recommend in the future for you, just so you don't do the same thing I did, is to right-click and disable everything temporarily. You can even do it from your whole format of your analysis and that, because it'll list all of them as they are. Disable them, and then turn your chart on, and you'll not suffer the issues that I went through. Just a word of caution there. As always, though, trade well. We'll talk again later.